Today, we talk about two stocks that have recently just put over $7,000 in, so let's get into it. Hey guys, saw all the positive feedback from the Penn stock video, and it seemed like you guys really enjoyed hearing me talking about finance. So quickly, we drummed up this topic in video, so shout out to Carl, who's recording and editing this really quickly with a quick turnaround, so show some love on his Instagram down here. So this was always a goal and passion of mine to talk about personal finance and my mindset and a bunch of different opportunities to make money, grow wealth and assets. So thanks for the support. And if you'd like to see more personal finance videos like this, let me know by clicking that like button and comment down below. It takes 2 seconds and it's really much appreciated. Let's get into the two stocks I see a big opportunity in right now. So to preface, within the last few months, I personally haven't been too active in the stock market in terms of buying or adding on new positions. I was extremely aggressive during peak quarantine months with investing. For example, the Penn video. So when prices plummeted to extreme lows compared to how low I bought in most of my positions, personally, I just haven't seen the value on adding where I'm at right now. The market seemed high and super overvalued to some degree, like Tesla. So as of late, I've been sitting on the sidelines and just watching the prices fluctuate and waiting for an opportunity, and here it is. First, I see a massive opportunity in Facebook. As I'm making this video on January 15th before the market opens, it's sitting at a price of $245.70 per share. Within the past week, the price has dropped off over 8% of $21.84. And within the past month, it's dropped off over 10% down $28.13. Within the past week, I've made 2 purchases. On January 11th, I bought 5 shares at an average price of $256.60. And on January 12th, bought 10 shares at $253.90. So in total, 15 shares at an average price of $254.80 per share. And seeing this dip into the 240s, I see myself buying into the dip more if it continues on a downward trajectory. I think we all understand how big of a social media juggernaut Facebook is and how, as one of the most influential social media corporations out there, they're clearly here to stay. Within Facebook's brands includes owning Facebook Messenger, Instagram, which is the social media garnering the highest user traffic right now, WhatsApp, and own Oculus VR and loads more. So what's the issue with Facebook and what's causing the downfall of this? First and foremost, the ban of Donald Trump from pretty much all of social media has had huge negative connotations on the prices of each stock, Facebook being hit the hardest as it also owns Instagram. The week following the announcement of the ban, Facebook saw a decline of $47.6 billion in market cap as the revoking of the First Amendment was seen as a PR nightmare. It brings up a lot of debates about whether the social media companies hold too much power, a topic for another video, but whenever any company borders on infringing the amendments in the US rights, you hear a lot of backlash. On top of this, it was reported Trump may retaliate and sue these giant tech companies, which could end up being a bigger mess of a situation than this already is. Issue number 2, the regulatory threat against Facebook is very real. Facebook is accused of having a monopoly over social media, and in December 2020, the Federal Trade Commission sued Facebook along antitrust lines. These issues and threats have always been around since they acquired Instagram in 2012 and WhatsApp in 2014. It's a constant battle that serves as a real threat to the company, and in 2019, they had to pay a $5 billion fine by the Federal Trade Commission. But in that scenario, the stock barely moved. In a worst case scenario where Facebook would be removed from Instagram or WhatsApp, it could actually create more value to businesses and shareholders, as both platforms are certainly big enough to stand alone as their own entity. The third and last issue, the pandemic caused a massive drop-off in advertising spending and rates, which put a dent into many websites' earnings and revenue for the year. As for Facebook, you can see a dip in revenue during the early mid-months of 2020, which is reflected in their lowest price of $137 around mid-March. Since then, the online advertiser space rebounded much better than anticipated, especially during the holidays, where people were spending more time online and online shopping. There are people whom are worried about the coming months post-holidays, where advertisers' rates usually tend to drop with the gift-giving season over, and Q1, usually the worst quarter for revenue streams heavily dependent on ads. Regardless, I don't see this being anywhere near an issue, as advertisers' rates historically reach their low point in Q1 and rise as the year progresses and peak at premium prices in Q4 during Black Friday, Cyber Monday, and Christmas. Given how quickly the e-commerce space not only rebounded but thrived as everyone was just stuck home, I just really don't see a world where Facebook starts to decline. Sitting at a $700 billion market cap and brought in $70 billion in gross revenue in 2019, they continue to grow and continue to dominate social media year after year. Facebook's revenue has historically grown 37% in a 3-year average from 2017 and 2019. Facebook peaked in 2020 at a high point of $304 per share in late August. At that time, I still saw the stock as a buying opportunity with a lot of room to grow. Now discounted at $240 and maybe even lower as the month goes on, I'm gonna take full advantage of the opportunity and believing in the company. Morningstar reports their fair value estimate of Facebook to be $306 per share. All signs lead to a buy with this stock, and I'll continue to monitor the price fluctuations and always buy into the dips to dollar cost average the price down. So the second stock that I'm extremely bullish on is Alibaba. Founded by Jack Ma, they've been a complete powerhouse across China. In 2020, during an abysmal year for all businesses, they were still able to generate 510 billion won and $72 billion as a US equivalent. On January 12th, I purchased 5 shares of Alibaba for $1,146 total. Then the price dipped further and I made another order for 10 shares for a total of $2,271.90. In total, I've purchased 15 shares at an average price of $227.80. Now, on January 15th, as I'm recording this, the stock has rebounded a little bit to an opening price of $246.25. In late November, the price reached their 52-week high of $319.32 per share. Since those highs, the stock price has faced a dramatic sell-off and drop in price. Let's dig a little bit deeper into what happened. The stock crashed 8% on November 10th when Chinese regulators announced a new draft for anti-monopoly rules for online platforms exactly like Alibaba. Then, in late December, an investigation was filed and launched into Alibaba over suspected monopolistic practices. This parlayed into a meeting regarding the People's Bank of China, China's Banking Regulatory Commission, and the China's SEC equivalent with Alibaba's financial group, Ant. Once this news broke out, the shares dramatically dropped another 6% that day. Overall, a company as big as Alibaba is simply too crucial to China's economy and is too large to fail in my opinion. At their stage, it seems really common to run into issues like where it may be a PR disaster, but realistically, this worst case scenario seems like they'll be a little more controlled, they might pay a fine, and they will be seen under heavy scrutiny. From a business sense, there are very few companies that show financial reports and statements as strong as Alibaba on a consistent basis. I won't go too much more in depth with Alibaba since it feels like I've been rambling for a while here, and I don't necessarily have specific target buy and sell prices at these stocks, as my strategy is to simply just invest and hold long term. My instincts and limited experience in the stock market says Facebook and Baba are great buying opportunities in a landscape where opportunities seem very thin. Anyways, let me know if y'all enjoyed this type of video. I had a lot of fun researching and sharing my financial mindset, so leave a like in this video and comment below your thoughts down below, and I'll see you next Tuesday.